Hey traders from around the world, what's going on? It's your boy Jeremy Alexander Newsome with reallifetrading.com. Hope you had a marvelously majestic Monday. It is indeed July the 9th and all kinds of fun and exciting stuff happening today. This note on my screen's been here for a while, and really I wrote that note on the 27th of June, which is this candle here that I'm pointing to in the red arrow. And the reason that day was specific and important, as I mentioned, that if it had not closed above and filled that gap, that we'd be heading lower. Well, we did close above that gap on Friday, and as I sent out a few emails recently, I mentioned on Tuesday, which is this day right here, I'll point to it with a purple arrow, mentioned that Thursday and Friday would either do absolutely nothing, or there would be a huge move, bullish or bearish. And we got obviously a very nice gap to kind of preempt the move bullish on Thursday, and then a really nice move Friday. So today's gap was a beautiful bullish retest gap, and for those traders in either the morning room or the afternoon room or both, they're going to get a copy of Mentorship Monday, which talks about me and focusing on and trading and looking at the day trade on the SPY. And this was really a beautiful trade. So I talked about pre-market support resistance levels, and kind of talked about where to be buying SPY. Look at this rotation, this S-curve into the 10. I mean, ladies and gentlemen, bullish retest gap, retested right into the 10. There's your S-curve. How much easier do you want it? That is like not even taking candy from a baby. That is being given candy from like the baby is giving you candy. You didn't have to take it. The baby said, would you like some caramels? And you receive some caramels. So SPY, very nice retest gap, perfect little morning star off the 10, off of pre-market support resistance level. A lot of traders did very well on the SPY today. Gorgeous move, and we did close above that pattern on a weekly chart. So I can take off this note. And also the cool part is for those traders who do option sales, we did sell a put down here for August at $250. And we did that not too long ago, able to already buy that put sale back today for a really nice gain. So if I zoom in here to SPY, just looking for that exact post. I guess it'll be easier to search for. I thought it was more recent, but maybe not. So here's SPY, and yeah, July 2nd, so I just didn't go far enough. So this one, again, even if it was just one contract, which is 100 shares, you're getting paid 134 bucks per contract, and you're able to buy that back today. So again, a profitable put sale, selling in the face of fear when a lot of other companies and traders and programs are still saying that the market's going to crash, go to zero, that we're in a bear market. It's just a matter of time. You got your boy Newsome on the ones and twos, letting you know that it's all okay, at least for now. So here's the SPY. That's what we got. Very nice gap. Now, what is interesting is it is only a matter of time, in my opinion, before this gap fills. We likely do trade higher, and then we probably do pull back into these areas at some point late July, mid-July. That'll be interesting for some swings and for some day trades. Of course, we don't have to, but we most likely will, because here's the weekly, and we got a retest gap before on the weekly. I don't know exactly when that was. I know it was a recent weekly chart because we had this gap up on a Monday and things looked really bullish, and then just that next Monday. So after that happened, we did move higher, and then we did fill the gap pretty strongly before we bounced. Could that happen again? Yeah, probably will. So we'll keep an eye on SPY. That's my current plans, but good job on the put sale. Well done being bullish on that dip just recently. In fact, this morning closed all of our bullish swing trades for a profit, every single one of them. And the reason I did that was because in June, about a week and a half before the free open house week, I was up on all of our swing trades then. And I can actually go back and show those to you, because I can go over here to the swing trade log. And again, this journal, anyone can access it. Those who subscribe to the Real Life Trading Floors, everyone who as a subscriber gets access to this. But here's the swing trading. And back in June, I'll show you these trades too. So it was right about here, right when we got this nice red streak. I was up on Cisco, Micron Technology, Apple, trying to think which else. HPE, Hewlett Packard Enterprise, HPE right there, and also this BMY trade. All of those trades at one point in June I was actually profitable on and could have just exited and taken the gain, and I didn't. So I said, hey, if I get another chance to do that, I'm going to do that. So I'll show you these trades. Here's First Solar. We'll come in and click on this one. This was the First Solar trade again, placed in the afternoon swing trading room, I believe last week. And here was the trade. Now again, it could have gone, it can go higher. It probably will, by the way. First Solar most likely will go a little bit higher. So feel free to keep your eyes on it. But again, it was just my plan, a long weekend to think about it. And I said, man, if we get bullish, nice move, and I'm locking in profits on all these trades, might as well lock in the gains. So this was the setup on the hourly chart. 53.26 by 50.16, and you'll notice it was getting above its moving averages. And this little double bottom right here, close with a neckline, boom, boom, boom. So setting that trade up. Plus, you had on First Solar a weekly moving average acting as a support. So here's the weekly, and it still is acting as a support. So I mean, you're welcome to keep your eyes on First Solar to continue higher off this 20. I think that there's a really good chance that that could happen. The other trade that we had was Hasbro. Hey Hasbro, what's up, bro? So HAS, this was a really good one. Happy about this trade, and again, just locked in profits. So this one, this is the exact setup before. So once what we did is we closed above the 200, we retested it, and I just simply wanted to pull back at 93.76. I'll show you how I got that price because we hit that almost the exact low the next day. So again, this is the trade setup right here. And this was the next day, we filled it just by pennies. So I came in here to the hourly chart on that day and turn off the extended hours. And we'll kind of come back to what I was looking at the moment. This was it right here. So this is really what I saw when I was setting up that trade on the hourly. So again, this was in the afternoon swing trading room. And again, it looked bullish. You had a good breakout on the daily chart. So this was the breakout right here on the daily. Retested. You had a good bullish candle, a really good bullish candle. I was like, you know what? We'll probably come back just at some point in the morning to test that high. This recent little pivot right there. And that's really what I set up. I mean, that's exactly how I set the trade up. Very next hourly candle, blink, that was it. And that's off. Never looked back. Just a beautiful, beautiful move on Hasbro. And that was a nice swing trade. So anyway, exit that one today as well. So all of these exited. Celgene, I mean, was one of the most beautiful trade setups I've seen in a while. This entry, this is the actual setup, 79.87 was the entry. And that was also based on the hourly chart. And the high of the next day on Celgene was 79.86. So here's the daily chart. So the high the very next day right here was 79.86. So that did not trigger in. And then on Thursday, it did. And you got so much going on for Celgene here. I mean, it's insane. You had a bullish gap and go. You got volume coming in. Again, this could still be and likely is a really good trade. So feel free to keep your eyes on it. But it was breaking out of a Bollinger Band squeeze. So here's a Bollinger Band. And my girl Melanie over there in Denver is the one that brought this one to our attention. And this sucker could move. So feel free to keep your eyes on it. But not only that, you had a monthly chart. So I put up a monthly chart. Here's the long term. Look at this 100 on a monthly. I mean, get out of here. We had to get in on that one bullish. We did, made some money on it, and exit that trade today as well. Even though I didn't want to, I'll probably be given an opportunity to buy the dip on Celgene at some level and just get back in later, but that was a good one. The next one, so again, all of these pretty much closing out right at the market open because I was up on all of them. Walgreens Boots Alliance. So here's the daily chart, and this is this trade setup that we had. This was a 1.5 hours. I mean, this was a good trade. So this is the hourly chart, and you can see pretty clean. So I was looking for it to break above 61.31, pull back to 60.72, right? That's where the limit order is, and then buy the dip. So that's how you can set up the S-curve. You can set up the buy the dip before it even happens with the proper usage of stop limits. It's really quite fantastic. So anyway, 60.72 was the entry on that one. And if we go over here to the hourly chart, this is exciting stuff. I'm going to move it over here. 60.72, the low of this candle was 60. $1.75. Now, it wasn't really magic, honestly. I was just saying, hey, I think it's going to rotate to the previous, to this previous high minus a few pennies. So, I mean, we got within 7 cents of not getting triggered into the trade, but it did trigger and worked pretty much immediately. So we exited that one today for, again, 1.5 hours. That was really nice. And Walgreen Boots just got added to the Dow Jones. And here's the monthly chart, also bouncing off the 100 symbol on a monthly. So you got Celgene and Walgreens both doing that. Was really good setups. And then gold. This was actually a weekly options newsletter, which could still be played. But I did email everyone this one who subscribes to the weekly options newsletter. Sent that out this morning. There are a few traders still in, because I more or less said, hey, if you're still in this trade, you're more than welcome to stay in. Totally your call. But I am exiting, and here's my rationale for why. So I'll pull up the trade, and for everyone who has the purchase, you can see it's kind of filled in here. So you can click on Weekly Options Newsletter, edition 94. And this was the setup on gold, GLD. A nice hefty position. I mean, a really nice tight stop, but there it was. There was the setup, and it was pretty much based off this Morningstar gap and go type of pattern. And it didn't look so hot on Friday, all things considered. We were actually down on it, I think 0.2 Rs at one point, but here's GLD. Here's the daily time frame, and pretty much right at open. So you can see 8:42 a.m. Eastern, which was right about, yeah, good job, Newsome. It was right here. We got out of that trade on gold. Because gold, I mean, doesn't gap like everything else. It gaps all the time because it's, the ETF tracks the actual spot prices of GLD, of gold. So anyway, if you're still in that trade, cool. If you're not, you're welcome to look at playing another dip on gold. But we were able to get out of that one also for a small gain. So this morning, pretty much about 10 minutes after market open, I was able to lock in 4.38 Rs. That's right, 4.38. And then, so I have so much to talk about today. Then I went on to play AT&T like a time-traveling wizard. Here's the 5-minute chart, and I feel like I did okay on it. But we shorted a pullback, got into it bearish here, and I exited the bearish trade right here at 32.22. So I got out of AT&T. So I got in bearish, got out of the bearish trade, didn't like the pattern, and that was a perfect call because it would come up, barely stopped me out right above the high of the day, and then rolled right back over. So that's what would have happened, but I did exit on AT&T, and I played that one like a legend. Now, with all good things come bad things. So I was feeling like a maniac, like just a time-traveling wildebeest of the stock market. And then the stock market was like, hey, by the way, Newsome, here's some humble pie. I hope you brought a fork. So I played PETS, P-E-T-S. This was a nice retest gap. So black candle, gapping down. So you can see the drawing here was, let's expect it to retest because it is a retest gap. And here's the here's how we played it. I'll actually I can just hop over here to the day trade chart. So the day trading current month, PETS. You'll notice I mentioned early, and I said horrible early exit. I exited really bad on this trade. So let me just show you the actual early exit. Let's do that. Because yeah, this was horrific. Okay. This is probably the worst exit I've had in a while. I exited, I mean, looking at it, even in hindsight, I can see, I was like, yeah, it looks good. Pretty much got in with the breakdown of this candle. And when it gapped on a 5-minute, so you can see it kind of gapped on a 5-minute, it was closing above that 10 EMA. Even though the 20 was in my favor and we were only down 0.3 R, and I could have just lowered the stop right to here and called it a day. I really thought I was going to run up into the 20 and stop me out and then roll over. So I was like, you know what, let's just get out. And I mean, like within the second of exiting that trade, within that second, this was me buying to cover right there. Now, my good buddy Steve, who was on the Real Life Trading Cruise with me, Dean, and Daniel Lindquist, all kept their short shares of PETS and ended up making some money on that trade. So I did give them some frequent trader points because they beat me. That's usually what I do. If you beat me on a trade, I go, hey, congratulations, well done, well played. if I had just set this trade, walked away, if I wasn't on the webinar today, I would have gotten in this trade, go to lunch, go to the gym, go work out or something. It would have been a profitable trade. Wouldn't have even had to worry about it. It would have been a nice classic 2 Rs. Easy retest. But I really flubbed that one up. So that's pets. And then Twitter. Oh, man. Wow. Twitter. Jeez. So Twitter, I also lost on Twitter. Now, how could I have lost on Twitter? Oh, man, honestly, I was, again, too aggressive. If I had just set this one and walked away for about an hour, hour and a half, this was the setup, 42.67 by 42.03. It was just absolutely getting creamed all day long. But Twitter pulled to a gap. You had tweezer bottoms, all that kind of good stuff. So my original stop was right here. And once this candle wick, seriously, this is exactly what happened. Once that candle wick came in, I set the stop right there. Got stopped out by that candle, only to see this, this, and this. Would have been a 3R trade, barely wicked out. Am I frustrated about that? Absolutely. Did I move my stop too soon? I mean, obviously, yes. But looking at it right now, what else could I have done? This is obviously an incredibly obvious price to have your stop, right? Below that line. I mean, everyone in the world's going to have their stop there this end bullish. So this wick, I thought, was the wick that was flashing, stopping people out, and then popping. Honestly, I did well in this trade. I mean, I could have lost 1R. I could have just walked away and left it alone. Had I just walked away, left everything alone, and didn't touch anything after I exit all of my swing trades, which was part of my plan, I would have had about an 8R day today. So dropping about 5 Rs doesn't feel great, but I still ended the day up over 3 Rs, and I am not going to really complain about that because you're making money pressing buttons. You can go back, ladies and gentlemen, and look at many situations at how you could have done better. What is most important is if you can look at something and go, absolutely, I could have done better on that trade. Here's the one thing I'm going to do to prevent that. Create a rule if it's something that you know for sure you could have done better. So for example, on me, it was a classic example of over managing a trade. Numerous times I have set up a trade and walked away and came back only to find that it won. And I've also set up a trade, walked away to find out that it lost, and I could have lost better. There's no way to beat the markets and know what it's going to do unless you have a time machine. So the point of the matter is, can you create a rule that helps you dictate and figure out what to do and when to do it? And I did have a rule for the first 2 to 3 years of my professional day trading career that said once you take a trade, I can't do anything for 2 hours. And I followed that rule. And that rule got me to where I am today. Because remember, every single month, I'm going to make money from the markets. It's happened for the last 3.5, 4 years running. What day is it? It's June, July? Yeah, so for the last 4.5 years, pretty much every single month, making money consistently and profitably. So with that being the case, I want to help teach you what rules to build into your plan so that you can follow them. Because I can follow my rules. I don't have a rule right now that says I have to walk away from the computer because I'm in a webinar. So if I'm in a webinar, I'm teaching, I'm talking, I probably look at it too much and sometimes I can overtrade. But it can be very, very useful to have some semblance of a rule that says, did you follow that rule? Can you follow a system that you've created? And that's really what's key. So without further ado, let me get to some of the stocks that were requested. Here's Carvana, CVNA, and I have tons of people asking when they should get into this trade. So Carvana, this is one of the stocks that I mentioned on the Real Life Trading Cruise back in April. Had a lot of traders ask me what stock they should get into, and the two that I mentioned was Carvana and IQ. And obviously that would have paid for the cruise regardless of how many shares you bought. Well, unless you bought like one. But Carvana, new all-time high today. Definitely not the time to buy, at least not today. I was bullish on Carvana. I did want the pullback. I did try to get a pullback on Carvana. Just never got filled on this put sale. This was back on June 21st. I knew the market was bullish. I wanted to own shares at 30. I was hoping a pullback would happen, but it did not, and I never got filled. It just immediately bounced that day. So no big deal. I played the put sale, but from here on Carvana, I mean, look forward to trade down into around the 20, price range, I'm sorry, $20 EMA, maybe a little bit below it, 38.62, and then look to buy the dip on Carvana. The trend, unquestionably bullish. Buy the dip, have fun, play that one, looks good. WWE, World Wrestling Entertainment, is at a very high price right now. So this is the weekly. This is an all-time high. I mean, it really recovered very nicely after it just got hit right in the face with a steel chair back on 2014 in March. I mean, it went from $31 to $10, and then you had that beautiful double bottom, and slowly but surely, WWE has just been crushing it. So if you're in bullish right now in WWE with some shares, it would be my opinion that if I was in trade personally, I would get into a collar. Collar is, without question, selling a covered call, buying some protective puts, and protecting myself in case of a pullback, which most likely will happen. So I'm not going to buy WWE here at all. In fact, I would just really let this one chop around, trade sideways, hang out for a while before buying, because it's already gone up megalithlically far. I mean, we're talking just this year. Let's see, January. Just this year, it's gone from $30 to $75. So it's almost tripled. 240% return, give or take. I mean, that is massive. Obviously, this move is the first really good gap. That's when you want to get in back in May. All of this is gravy, but just wait on WWE, buy the dip. It's a little too high right now. That's pretty much all I got. Here's BILI, and Billy is up 4% today. I am keeping a very close eye on this stock as most of the Chinese IPOs are kind of pulling back and they're chilling out. So you had a beautiful move, a pullback. We're going to get a rest for a while, and I'm looking for a little bit of a curve like this. I get about 300 requests for IQ a day. So here's IQ. Similar to Billy, similar to the other stocks, I am looking for it to go higher. It is in a bullish trend. I do love the volume. And if you want my advice, I would say remove the I, add an S, and go back trade square if you want an idea of what I personally think IQ is going to do, or at least something similar. I think IQ is in a similar pattern to this right here. And I'm not saying that's exactly what's going to happen, but I could make a good argument that we're around this phase in the red circle of that pattern on square. Even though they're not related really at all, I'm good with patterns, right? That's one of my professions. So I would say IQ, I think we're going to go a little bit lower, chop around here for a while. I do love put sales on this one. Implied volatility is great. Premium is solid. I'll be looking at selling some puts. The biggest key on IQ is as long as it can hold above this 50 EMA. That will be very strong. If it doesn't, it's going to experience a lot more weakness, most likely. And I'll be keeping some close eyes on it. Maybe look at it on like a 2-hour or 4-hour chart. But other than that, as long as it can hold that 50, we should be all right. Got two more to look at. Here's 3D printing. And 3D printing, a nice white candle today, really good looking trend. Here's the weekly chart. Here's your long-term moving average. You'll all know that I've done numerous put sales on 3D printing. I never got putting shares, but there are some traders out there that do have some shares. So if you have some shares of 3D printing, the next Helen and Troy resistance is this 200 simple on a weekly chart. So it'll be my opinion that you'd probably look to sell a $17 covered call for August for those who have shares on 3D printing. I think that's a nice level. Makes sense to me that it could get up there, but then likely pause. So yeah, if you're in some shares, I think a $17 covered call on 3D makes sense. Otherwise, if you're not, you're just looking at, you know, when do I get in? The bounce has already happened. This is the S curve. This is the pullback. You got your morning star. You got your beautiful hammer candle. Should have been in as of the 3rd. So it's trading higher. Looks decent for now. Pulling into some resistance, but I think it's a matter of time before we get up to that 1825 level. And last but not least, as far as requests are concerned, here's MGM. MGM Resorts, weekly chart. You actually have almost a tweezer bottom, 2 pennies away. What's exciting on MGM is this old resistance, new support. So there's the resistance right there, and there's the support. So you almost got a tweezer bottom, which is grand. Here's the long-term moving averages, and we are below the 200 simple, the 100 simple, so we're kind of right in the middle of those. But the daily chart, you got a very cool candle. This is an interesting candle on MGM. You have a one white soldier candle right here, 1 penny away from a tweezer bottom, and this candle is occurring right at a wick. It's almost unquestionable that this thing will continue a little bit higher. So I'm gonna look to scalp this one tomorrow morning. I'm gonna go ahead and put it in my watch list right now. Let's see, what day is today? Monday. So Tuesday morning, MGM. I'm gonna go ahead and begin to plan a potential day trade tomorrow morning, just in case this bad boy pops, because I love that candle. What would be even better is if we get an inside day candle tomorrow and then it pops on Wednesday. Oh boy, oy vey. That would be a really good trade. So we'll see what it does. I'll watch it tomorrow just for a little bit of a break out of that short-term resistance. Really good spot to buy back down in here if you got a chance to probably take it bullish on MGM. But I'll be looking at tomorrow morning. Just keep an eye on it. I'm not saying it's going to go higher, but you know, just in case it does, I'll be there for you. All right, that's it. That's my review, ladies and gentlemen. I hope to see some more requests between now and Wednesday. I'll catch you then. I got the afternoon swing trading room from 5 to 6 p.m. for the third portion of Mentorship Monday in 29 minutes. Traders who signed up are getting over 5 hours of recorded content today as part of their subscription to Real Life Trading. Ladies and gentlemen, thank you so much for helping us reach 15,000 subscribers. It's been a beautiful journey getting here. I'm really excited to see where we go from here and what the next stop is. But Real Life Trading, getting over 15,000 people who say, you know what, the stock market is cool. I want more info. I think that is a wonderful number, as a life-changing number right there. And if we can continue to grow, as we will, more and more people will begin to become enriched. They will learn about trading. They'll learn about how to control their finances and how to become wealthy. Ladies and gentlemen, you are amazing. I will see you later. And until next time, love life, live life, and trade. Bye.